2.1 billion shillings hidden hole in Chess Bank. You remember Chess Bank, it's been many years, but this has been an ongoing court case where it says here the Capital Markets Regulatory yesterday fined Deloitte after the audit firm failed to detect a non-existent 2.1 billion shillings Chess Bank account at the central bank that enticed bond investors to offer the collapsed lender billions. In addition to being fined 10 million shillings, Deloitte faces further scrutiny after the Capital Markets Authority asked the accountants regulator to probe the consultancy for failures that saw bond investors lose 4.8 billion shillings after Chess Bank collapse. Deloitte failed to verify a false claim from Chess Bank that it had 2.1 billion shillings in Central Bank of Kenya account, according to CMA investigative reports sent by the Business Daily. The non-existent account is believed to have inflated the cash position of bank, encouraging investors to offer it the 4.8 billion shillings in 2015 through a corporate bond. And that story continues on page 2 of the Business Daily. And I just want to ask, first of all, if any of our panelists here lost a tidy sum of money with the Chess Bank, it's a good time to open your hearts that we can console you as well. And maybe also this will come as a relief at the end of the day. But let me just cross over to you, Bilo, because I know this was a big, of course, story also in the Senate. And you can tell us finally, do you think justice for many that lost their money has been meted out?
No, justice will be done when the investors or depositors get their money. But it's a very positive development, I think, to find that the audit firm, did not do its work as required by law and failed to live up to its reputation. Deloitte, like most of the other audit firms, tend to rely on representations by the executive. That's always the case on some of the transactions. And it's not the first time. I think a number of audit firms in this country have been found, particularly with audits relating to banks. Particularly with banks, I think audit firms have always been, banks are major clients for audit firms. They pay tidy sums of money, and there's a tendency to rely on the directors. And in this case, Chase, I remember this matter we investigated the Senate Finance Committee, but one of the things, apart from really the indication was very clear that the auditors did not do their job well. But we also in Senate had bones to pick with the regulator, central bank, because it's not, there's no, the whole process of auditing of banks is regulated by the central bank. The auditors have to be approved by the central bank. The reports that they generate go to the central bank for closer scrutiny. And I remember in the case of Chess Bank, before the audit report was signed, central bank got involved, and this is how they changed even the audit opinion that was to be given by this firm just before it was finalized. So I think I would have also expected CMA to tell us a bit of the role that the central bank officials played, because I remember we told the central bank governor and his team that there is culpability by his officers too, because there's no transaction in any bank that central bank is not aware of. Every of transaction, even before the audit, if you maintain this kind of an account which is false, you're saying I have money in central bank, and you give that in your prospectus to bond investors in the bond, it's not even about the audit. Even before the audit, those kind of transactions are always known to the central bank. So I would be surprised if no one in central bank has been found culpable for this. And this is an issue that we asked the central bank governor at the time.
Yes.
Why don't you deal with the officers? How did this happen? How does the bank, do this kind of transactions right under your noses and your people are not involved? Because it's always, when you go into the details of what happened at this bank, people in central bank were aware of what's going on. They work in collusion. There's no way, because these banks are supervised so regularly, weekly, daily, in terms of reporting, in terms of inspections. in terms of the reports that they do. So it's not but I think it's a very good thing, and I think I like where they said also the Institute of Certified Public Accounts should also carry out further probe in terms of, because audit firms get licensed every year to practice, and I think they also are subject to practice reviews, by the peer reviews by other firms and by the institute to know whether their quality of audit assurance is reliable. So, but I think it's a very positive development, and although it took too long, but I would expect something else to come up also from the central bank. This is a matter that is in court. I know this bank issues are very strongly in court, from the shareholders, by the directors. The whole process of this bank is in court. But this is a very positive development, I think, in terms of really putting the auditors on notice that you cannot get away. The first time that this kind of a fine of 2 billion to a professional firm, whether it's auditors or lawyers or, this is the first time, and I think it's a good development. The maximum we have ever found, for this kind of professional negligence, if you will, has been 20-30 million doctors, or this kind of thing. But I think it's a very important message to all professionals that you must be ready to pay a price for professional negligence.
Professional negligence. Because
of culpability of central bank. By the way the central bank put those two banks under, we challenged it in Senate. Personally, I was chairing the committee.
You challenged the committee?
Because both banks do not have, problems of liquidity. There are ways of handling. For example, in this case, if directors were involved in some fraudulent transactions, they could have taken action on the directors and the banks would have continued. But the moment you announce that this bank, I'm going to take action, then there's a run on the bank and the bank collapses. This is what happened. Both of them were actually the central bank acted very rationally in the way they handled both banks and were responsible. But in any case, this matter, it went to ethics and anti-corruption was investigating. In the case of even the Imperial, actually the DPP had actually taken also ordered some investigation, because and the investigations were involvement by CBK officials in the bank. This is the investigation that both ESCC and DPP were investigating. Yes. So I mean, banks are so highly regulated. By the way, it's not an easy thing for you to just do things and get away with it.
Conferences people being sponsored by Chess Bank, who were in Central Bank. And it's still integrity again.
Integrity. There's a whole issue that when Professor Mwenje, you're talking about Enron and the collapse of Enron and how it really went down. And we saw that particular crisis, what it really brought about when it comes to the issue of corporate governance. I think that's where was the genesis where corporate governance really came to play. And we had a bill that went to Congress with Sabali Oxley, a bill that now we have the genesis, and everywhere we have the corporate governance really coming to place as well. Because when you look keenly, in all this malfeasance that is happening with these banks, with other corporate and state agencies as well, it is all boiling down to corporate governance. And isn't it? Corporate governance completely. If there were cahoots, as you say, was it really handled in the wisest of fashion? Was the whole issue of Chess Bank salvageable at the end of the day? If it was handled in the proper fashion, and people did not really panic, and there was a bank run at the end of the day, will Chess Bank be there today?
Without the involvement, let me tell you, in the 90s, you remember late 90s when 36 banks collapsed. I did some work for Central Bank at the time on the corporate governance, because I'm a trained specialist on corporate governance.
Okay.
But let me tell you, but those days, it was before the Central Bank came up with this prudential guidelines for the, things were a bit lax. And so a lot of the banks were involved in insider lending and other malpractices. You remember when all these Continental Bank and most of these other small banks, about 36 of them collapsed in the late years of Moi. But over the years, really, the issue of corporate governance, and the prudential regulations governing the central bank, things have been a bit tight. And unless there is collision with central bank, it's not easy for the banks to engage in this kind of fraudulent activity on the scale of this scale, without notice by central bank. It's not easy. Yes, because what happens is, and you've seen when Dubai Bank collapsed and so forth, you know, all those things, what happened, the same thing is happening today in insurance. You find an insurance company that cannot even, you know, meet its basic obligations like pay claims when they, you know, when you file a claim and so forth, and they're still being licensed by the regulator. So sometimes when the regulator looks the other way, then this is what happens. Otherwise, for the banks, I'm telling you, central bank, with the kind of rules and regulations and the way they conduct their, are supposed to conduct their activities, it's not easy for banks to engage in this kind of things and get away. But on the other hand, the way they reacted was partly responsible for the chaos in these two banks. You know, there are certain things which we may not always agree. I was in Parliament when President Kibaki was in office. But unless Prof has selectively decided not to remember, if there was any time when corruption overshadowed the entire time of Moi, it was during the first 5 years of Kibaki. You remember when up to 5 ministers had to be sacked because of the Anglo leasing.
Yes.
I mean, it was not, the economy did well, yes. But the issue of corruption never abated in any of these regimes, including now when it's even the worst it's ever been. But I think the issue is this we have institutions, we have laws, we have regulations. That is basically what we have. It's about compliance. So what Prof is saying is that CMA, in terms of corporate governance for listed companies, CMA has the rule book. They are supposed to enforce. When they don't enforce, then this is what happens. You've seen what happened in Uchumi, you've seen what happened in Kakuzi, you hear about this happen every time. In all our institutions, there is always this lapses because of failure by one institution or the other to enforce compliance. And it's largely because of what, you know, about integrity, you know, about what we've said earlier, because of, it's not that people don't know, you know, it's people know, but failing to enforce compliance partly is because of lack of integrity, you know, or because of corruption and these kind of things. So I think as long as our country has this problem of integrity, has corruption is pervasive in the society, then we'll have in this kind of failures. Although, to be fair, in every country in the world, institutions sometimes, you know, this even the best of the, you've seen the Wall Street, in the best of the countries, these things happen, and the professional funds sometimes do fail to live up to their task, and they get, you know, paid. They pay the price, and this is what is happening.
The executive powers of the president and the executive orders, how have they been implemented? Have we been having an overplay of his hand in some of the executive orders he gave? If we may just broach the subject and critically get granular with some of the executive orders that have been executed by the president. A case in point, we have the CASS, which was not an organ of the constitution, but we have an executive. Was it really called for that we have a bloated sort of a mongrel of a government, going with the deputy president's word, that we have a mongrel of a government? We have the CSs, we have the principal secretaries, and we have a line of CSs under them. Duplication of work completely. And we are actually talking about a bloating wedge bill. Did the president also expeditiously, when we look at the executive order, did he overplay his hand? And how do we term that for the next coming government as well?
Yes, I think that's obvious. I mean, you know how many cases...
Briefly, because we have only 5 minutes to go. Yeah.
How many cases have been brought to court challenging those orders by the president?
Yes.
Not only orders, by the way, appointments. You know, there are dozens and dozens of court orders stopping some of the, you know, presidential directives, presidential orders, presidential appointments, even into institutions and so forth. So, and it tells you clearly, in every case, the court was very clear. Either it's a breach of the constitution or a breach of a law somewhere. And it's not as if the office of the president was without advice and did not know that what they were doing was not right, but I think clearly it was an attempt to try and overreach themselves and go, you know, and do some things, you know, outside of their mandate in law. And you don't remember that order also on the courts.
Yes.
You know, so I think this unfortunately has clearly, even after the new constitution, shows that we don't have commitment. We don't have really, constitutionalism is still something that has not become internalized in the leadership in this country. And, you know, we still use it, you know, for expediency. You know, I comply when it's necessary. When it's not necessary, I can flout it. And, you know, so and I think, unfortunately, that seems to be the challenge we have.
Thank you, Bill.